Hi, everyone. How are my trading warrior brothers and sisters doing this morning? Good morning, Brock. How are you? Sinatra. So the turnaround Tuesday trade worked for just this amount, about 15 pips or so. Got out. Still diverging down here. I have a hard time wanting to short euro down here. Stock indexes. Next couple days, pretty important with the Fed here. I thought we might talk to Blake about it. Maybe we could ramp up into the Fed. Here we are. Perhaps I get run over. This looks like about 61.8 and NAS 100 right there at the 50-day moving average, about 61.8. So we'll see. We're either going to fail in here or blow to another high. So we'll see if I get run over trying it again here. What makes me think I might, there might be more upside is I still think there's going to be a better level to short US dollar yen up here. And as you can see, the last couple of days, yields are trying to stabilize. Here's the 30-year, it's trading, right? So almost filled the gap yesterday. Looks like we're going to try and get some type of ABC here. There's the 10-year. We'll see if the 10-year can fill this gap. It hasn't yet. And TLT, after the massive breakout, is pulling back. For those that know me, why and some of the work that I teach casually here, why is it that I don't think the bonds have peaked? Any guesses? Monica, you want to take a guess? And not any of my mentees that would know. Take a guess, going once, going twice. What's one of a new high, right, Tom? Not just a new high, but a confirmed high, okay? Reading very at 80. Markets normally don't put in an important high. They could put in a high, but most likely not the high. Markets rarely peak when price and momentum is confirming price. So you get the gold star today, Gautam. Let's see what else I want to touch upon here today before I turn it over, hand it off to Blake. One thing you have to say between gold and silver is gold's the preferred long. It has been filled the gap, holding the 50-day moving average. So we were talking yesterday that I could understand why Grega is bearish gold, that this could be a failing rally, and if we take this out, looks like 1530 is pretty viable. So that perhaps this was 1 or A, 2 or B with a 3 or C to come. I'm still not convinced. And why is it, that this is the high in gold? Same reason, right? Okay, on the daily, 85 reading up there. So all I know is if we got a real good gold rally and you had a sympathy rally in silver, silver's the one to sell, okay? And gold could make a new high, and silver could maybe only fight its way back to $18 on its relative weakness. We'll see. Oil, like Steve said, every bounce looks corrective here in the oil. And I think that's about it. We had Apple earnings, so I believe we're going to be at new highs on Apple here. Oh, we got the intraday yesterday. Look at this. So even Apple, which is the market leader, is not confirming. I think this was yesterday's action in the aftermarket after earnings. And then here's Microsoft, which fought its way back after the bad down day. I don't know, it looks like it's up here. So even if Microsoft made a new high, that too is diverging. The bank shares, they've been suffering because of yields. So we'll see what happens here. Bank shares are the weak sister in here. And I really don't think they do anything significant to the upside until we complete down here. And even this little bounce in the 10-year does nothing to change the narrative that I've been saying for quite some time, that I'm looking for new lows in the 10-year yield. Blake is here. Blake can go out and have fun and then come back and do analysis all night. So as Blake says, the show must go on. And at this time, it's my pleasure to introduce Blake Morrow, Forex Gal.
Good morning, Dale. Dude, you covered everything. I got nothing to cover now. I'm done. There's
come on, man.
I got up this morning to do, our updates on, the FX market, and I think I sent out like 2 charts this morning because there's really, the market's just not moving. We do have the Fed today, so we have the FOMC, which, as I said to you yesterday, I don't expect anything really out of the Fed today. So I think actually the bigger mover is going to be the Bank of England tomorrow. And when's the last time that we've got a move following a Bank of England rate decision?
I can't remember.
We're going to get one tomorrow.
What's that, Steve?
We're going to get one tomorrow because the market is pricing in half and half, if they're going to cut or not.
Yeah, most economists are actually looking for a cut tomorrow. Hold on, let me see if I can pull that up really quick. Second. Give me a moment. Remind me in a week. Okay. Let's go to. All right. So, for tomorrow, we have 44% expecting a cut tomorrow.
Exactly. And that is why the market is going to move, because it's more or less evenly spread the possibilities of cutting or not. So the market is not fully pricing in one direction or the other. So we should have some movement.
But like I said, when's the last time that happened? If we get a move tomorrow,
Yeah, it wasn't recently, because until very recently, the only thing the market was focused on in the UK was Brexit.
Yeah. So So it's we've kind of been, well, I say we have been waiting for the day for the market to start moving the cable based on economic data and Bank of England expectations. So tomorrow might actually be the day. So that's exciting, because today I don't think is going to be very exciting. So matter of fact, let me just go back to that screen. Where is it? Go back to the screen. You look at the United States, and we have 0% cut probability. So everything today is going to be based on adjustments on all technical adjustments based on the OIER and whatever the Fed decides if they want to make any adjustments whatsoever to what they're doing. But now I think the risk today, which is a small risk, but it's a risk nonetheless. A small risk would be if the Fed starts looking at, they know, like global developments, which would be equivalent of, hey, we're kind of worried about this coronavirus. You saw, and I'm sure if you guys are even if you're using social media, because it's been all over the news services as well. China is looking for GDP to possibly shrink to 4 to 5% now. So That's a huge impact. And that's as of right now. That's if things don't progress. Although I did see a chart yesterday that it seems like cases of coronavirus are actually going down on a day-to-day basis. So that's a good trend. You know what I mean? I actually have it on my phone. I don't have it in front of me because it was sent to me on via text. But the number of cases, if you look at a chart, let me see if I can just grab something real quick. I'll just move this over so you can't really see it. The chart on the number of cases on the coronavirus look like this. This would be 2 days ago, and then this would be like yesterday. So like yesterday, you know, it looks something like that. You know what I mean? Like,
where's the RSI on it? Right here.
Yeah, but that's good, because we don't want to see that increasing, because the difference between coronavirus and the flu, I'm sure most of you are becoming more and more educated about this as we go along, is that the coronavirus, the fatality rate, the death rate is much higher than flu rate, right? So that's the kicker. It's not so much, oh, well, it's just another strain of the flu. Yeah, it might be another strain of the flu, but when, I forget
think
what
they call that morbidity.
Yeah, I mean, the flu virus kills like, less than 1% of, people that get the flu. Well, it kills, the coronavirus is like 3 or 4% or something like that. I forget what the exact numbers are. Don't quote me on all that. But that's the scary part, is because it's, there's no vaccine yet. People think that it's being worked on, but or that they're getting close, but it's still, we're a few months away, and we don't know if it's going to, if that the rate is going to spike. But it's interesting how we're all becoming more and more experts on a daily basis on the from the CDC reports. Everybody's now a coronavirus expert, so I don't ever claim to be one, but I do know that the news is market moving. So let's take a look at a couple observations that I want to make. First and foremost, here's the S&P. So the S&P is bouncing back towards, and let's delete this really quick because everybody knows the big confluence there. So we're coming up to the previous support, current resistance, which comes in at 3,300. That also coincides with the 618. You can see right here, 618 retracement of the fall comes in just a little bit higher than where we're at. Now, what I find most interesting about the S&P, well, actually, Dale, are you still here?
Yeah, buddy.
Okay. In the FX world, okay, you see the bounce in the S&P. It's been a pretty decent bounce. I mean, we've bounced over 50% of our losses. We've bounced back, taken back that. What do you notice in FX that hasn't happened?
The yen.
Yeah, right?
Yeah, US dollar yen.
Yeah, the dollar yen. I mean, this is really, if you use ForexAnalytix, or even if you've been following along here, I've been talking about, hey, we gap down. We're going to fill the gap because we gapped down and we weren't moving lower. So we filled the gap.
It really respected that internal line, Blake.
It did. Yeah. The internal, like, little previous trend line here.
Yeah.
And so we were expecting this gap fill. I am irritated because I had an order at 109.29. It didn't get triggered because I was 109.26. So I got up this morning. I'm like, damn, I didn't get I didn't get that position off overnight, which is fine. I mean, because now it's like, okay, what do you do with it now? Well, you got to wait for FOMC.
Well, we could get that C, like you had that line up there before, one more charge up there to your line.
Yeah, we might get a move back up to 40, before coming down, especially if the S&P can make it to 3,300. So the thing I'm looking for today is how does the dollar yen respond should the S&P get back to 3,300? That's going to be the key, because once we hit 3,300, the first thing I'm going to do in FX land is I'm going to look at the dollar yen and say, okay, where is it? And should I be shorting it right now or buying yen? That's going to be my first question that I'll be asking. But you know, the dollar yen, the lack of bounce is the same. It's the same issue that we had here back, you know, a week and a half ago or whatever, when I said, hey, you know, stocks are hitting all-time highs, but the dollar yen isn't going higher. That just means that when the stock market comes down, the dollar yen is probably going to come down. Well, that's what happened. So same situation today. You know, oh, we got the stock market bouncing, but the dollar yen is just not responding. I mean, it is, but not very well. So my 2 cents are, you know, if the stock market rallies to 3,300 in the S&P and the dollar yen fails to make much headway from here, then the chances are that we're going to, you know, we're probably heading back down towards 108 eventually. And so that's what I'll be looking for. Now, obviously, we have the FOMC today, which is going to throw a monkey wrench in the master plan, at least near term, possibly. But so, you know, before I go out and try to aggressively be trading the dollar yen, I'm going to have to wait till and see what the Fed does, because obviously the Fed could say something extremely hawkish and the dollar yen could spike up towards 109.60, or they could say something extremely dovish and the dollar yen trades down to 108.50. And, you know, then I'm going to have to assess the situation from there. However, I have to admit that the dollar yen is really failing to do anything. And I know some of you probably shorted the dollar yen last night when we hit 109.20 or 109.25 once it filled the gap. And you're probably going, man, you know, too bad for Blake. I ended up getting a position off, but that's good. I mean, because it's happening how we expected. I just expected just a little bit more overshoot, but we filled the gap perfectly, really. I mean, if you look at it, I mean, this is a perfect to the T gap fill, right? To the T. So anyway, now, you know, now we just, like I said, we have to wait for the FOMC. The euro is still trading heavy. The euro is just can't get out of its own way. We're skating along. You know, this right here, by the way, this dotted line, just so you guys know, here's the daily chart. Take the highs from way back in 2018, come through those highs back in mid 2018, all the way through this high back in November of 19 to this low. You can see how respectful we are of this trend line right now. Now, does that mean it's going to hold today? No. You know, it's all about the Fed today. So, you know, the Fed says something hawkish, the euro dollar should trade down to 109.50. I mean, the euro is already trading heavy. Today, we had an upgrade in German GDP from Germany. Well, all that tells us is we're not going to get any fiscal stimulus, you know, because if they were downgrading German GDP, we'd probably go on, hey, you know, the Bundesbank might be, you know, telling some of their politicians it's time to unleash some fiscal stimulus. But if they're actually upgrading their GDP forecast, we're not going to see that. So, you know, the euro, even though it bounced a little bit after that headline came out, I say a little bit, like 3 pips, maybe 2 pips, it came back down again because people are like, well, we're not getting any fiscal stimulus. So the euro is probably going to trade heavy unless something different happens with the Fed. Like if we start to get very dovish remarks from the Fed, then the euro might actually bounce. But for right now, the euro is trading heavy. We're in a pretty key support zone. Just, I'll say the exact same thing that I said yesterday. I wouldn't want to be short down here. You know, yesterday I told you the same thing, and we were down trading around 110 and we bounced back up to 110.25. I just wouldn't want to be short down here. But, you know, being long, you have to be really careful. If you're long, you know, we continue to grind out lower lows. So just, you know, keep that in mind if you're trying to trade counter trend. The cable is, you know, head of the Bank of England. We're pretty important, and I would say very, my dogs, excuse me, if you could just hear them. My dogs are barking. It's the cable is at a very important crossroads as we sit here and challenge multiple trend lines. We have this uptrend line here, and we have this previous broken trend line that'll come in, around 129.80. So this is one of those situations that you want to be really careful being on the short side of the cable. I actually bought the pound yesterday. I bought it at 129.92, and then I sold it and made a little bit, and because I told you guys yesterday, I'm buying it down here ahead of the Bank of England. This might give you a second look, but tomorrow I'm hoping the cable will be back up towards like 130.40 ahead of the Bank of England, but it may or may not. We'll see. But the fact of the matter is, we're going to have to wait till after the FOMC to see, have a clearer view of where the cable's going to be. But just keep in mind that the Bank of England is tomorrow, and like we had pointed out and showed you guys, it is a split decision as far as what the market is expecting. So we'll have to be a little careful here with the cable. U.S. dollar Mexican peso, it got slammed down as the stock market rallied. This is the one currency pair that really responded well to the stock market bounce. The dollar Mexican peso came under pressure. I actually am still trying to buy, believe it or not, I'm still trying to buy this 161% extension of this move. I thought overnight we might hit new lows, and then I was trying to get long down here. I'm still trying to do that, because if the S&P does make it to 3,300 today, then the dollar Mexican peso might actually hit new lows. And the reason why I say that as well is because we have, today is Wednesday, so we have a really, really big rollover for carry trades. And so anybody that's long Mexican pesos can, capture a bigger carry rollover payout today. And if you're short the US or short the Mexican peso, you're going to be paying that out. So no one wants to be long the US dollar Mexican peso going into this afternoon. So what I'm hoping will happen is this evening we'll drop down to the 161% extension. Then I want to be long, because this is one of those situations where if we drop down on the 161% extension, then the S&P rejects 3,300. It'll come down. US dollar Mexican peso should, well, I think it'll come down. US dollar Mexican peso should bounce down here. And, that's how I'm trying to play it. So that's just another way that I'm trying to play the US dollar Mexican peso and the current environment. Some of you guys are probably wondering, yeah, I went to the Phoenix Open yesterday, and I was doing the math for our team, and I'm going to do this math for you guys. It's pretty crazy. So I went to the Phoenix Open because I don't want to sound like a snob, but I am, because I've lived here not my whole life, but a long time. It's so crazy around this part of town, which I live a mile away from where this tournament's happening, that I try to avoid it, if I can, unless I get good tickets. And then I got tickets for 16. So there's 300 suites on the 16th par 3. 300 suites. Each suite for the entire week is $56,000. So $56,000 for 16 tickets. You divide 56,000 by 16 divided by 6. That means each ticket is near $600 a ticket. So when I got the opportunity from my best friend, who happened to have a bunch of tickets, he's like, no one goes on the practice day. So we got a bunch of tickets. You want to go? I'm like, yeah, I'll go. You get free food and free drinks and, all that stuff. And it was great. It was really, really, it was fun. It's fun.
So how does a family of four, Blake, where the guy makes 40K a year, 50K a year? Yeah.
You can't get it. Well, I mean, you get general admission tickets, but general admission, you're going to be walking around the golf course, and then you're going to pay Disneyland prices for food and drinks. So, because it's like,
Yeah.
$15 beers and a, $8 hot dog. But that just the 16 alone, I did the math. They generate $84 million in revenue just on the 16. They have added stadiums to 17, to 18, to like a couple of the other holes. And on top of all the beer gardens they probably make $500 million in sales for this tournament, which is crazy, right?
It's like the tale of two cities. It's the best of times for some.
Yeah, and they're all
more.
corporate tickets too. So
Yeah.
it's and that's we got.
Oh, that's what they did with the Trump tax cut.
Yeah, I mean it's really like this is I actually had to on my way out I had 5 extra wristbands in my hand, and I was giving them out to people like, hey, do you guys want some free drinks and food? I was giving them out to people on the way out. So
Joe Perry sneaked his beer in at Disneyland.
That's nuts. Nuts. Anyway, I will never admit if I've ever brought a flask into Disneyland. Anyway, I hope you guys have a great trading day today. For those of you in the chat room, I'll see you in there. But by the way, if you've been waiting to use ForexAnalytix and you're waiting to try it, well, now you can, because it's $1 for 10 days. So we're back to our normal pricing. So go ahead and try it out. Also, I want to say that the daily roundup webinar today, I will be hosting it. It will be before the FOMC. So, see that webinar, because it's going to be kind of a quick recap of what the market's doing ahead of the Fed. And I'll let you know if anything's changed or if my views have changed. So I'll see the rest of you in the chat room, and I'm going to pass it over to Steven Stelios.
Good luck today, Blake.
Thank you, Blake.
Hey, have
Blake.
a great one, guys.
You too, mate.
How are you doing?
How you doing?
I'm good.
How you doing?
My wife also has the flu now, so it's 3 out of 4 we have the flu. I'm still intact.
Dude, flu vaccine.
We do that. But
it's still...
Things are different every year, right? And
they are somewhat
everything.
different. Yeah.
Yeah, you need a bit of luck as well. Anyway, it's okay. It's okay. It will pass. So, FOMC today, I think Blake said it all. I don't expect anything today. I mean, like I said yesterday, I don't see any reason, given the global and local developments as well, for the Fed to be hawkish. I mean, I don't know, Steve, do you see any reason? I don't see any reason for them to be hawkish.
There's some speculation they might discuss the expansion of the balance sheet. If that's the case, and they discuss it in terms of restricting the speed with which it's getting inflated, I'm pretty sure the market is not going to like that. So other than that, as a possibility, anything else I think is going to be a non-event.
Yeah, I agree. And for the people who didn't watch the webinar yesterday, the markets are pricing a cut in the Fed by, I think, the November meeting. So it's still quite some distance away, and it can easily be brought forward if they come out dovish, or it can be taken out. But as I said, I don't expect really much from the Fed. The Bank of England, on the other hand, tomorrow things are going to move, and our friend Gautam is saying that rate probability is under 50% rate cut probability. So even if the Bank of England does not cut, cable will not rally. Well, I don't agree with that.
No, I don't agree either.
Cable will not rally if they don't cut and they give really good guidance that they're about to cut, maybe in the next meeting or two. Then tomorrow's 50% chance gets taken over to the next couple of months, let's say, or 3 months. That could happen. But if they just don't cut and are not uber dovish, then I think the pound will rally. Anyway, Okay, that's what he means. Okay, fine. So we agree. So the main event of this week is the Bank of England, and of course Brexit on Friday. Although nothing's actually going to happen on Friday apart from the typical Brexit day. And I read the headline yesterday. I think that official negotiations are going to start on the 2nd of March about how things are going to be done moving forward. Why not waste 1 month and start in March? I mean, I don't get it. But anyway, I don't understand. Oh, we had some data just now, didn't we? Goods trade balance US, okay, pretty much at.
Yes, nothing to write home about. Nothing that the market is going to move, especially ahead of the Fed.
Yeah. We also had Australia CPI 0.7 quarter on quarter, better than expected. 1.8 year on year, so that's creeping up slightly. Which is good because Australian inflation has been a little bit erratic, so I'm sure the RBA are going to be happy to see that, and I'm sure they also can't wait to increase the cost of living of the average person.
Of course,
as they can. So that's it. I mean, there's nothing more happening. I mean, the equities are bouncing back. Filled the gap, and I think we're getting close to a nice selling, probably a nice selling opportunity. It's like
indeed
the market, got scared of the virus for a day, and then suddenly it's it's fine. We don't have 5 million people dying, so it's going to be all right. It's not exactly like that. I hope we don't get the mortality rate increasing, but I don't think you can dismiss it like that. But what do I know?
Yeah, true. As I was saying yesterday, though, I don't believe that the virus is going to end up being, the trigger for like a massive sell-off in the market. But having said that, I do believe that we should see at least one more leg lower. So I do agree that, selling somewhere here is a good risk-reward ratio. We should see another leg to the downside, I'm assuming. But I wouldn't expect that solely based on the virus threat, we're going to see something sustainable.
Steve,
not unless...
what did yesterday's pop, that one candle, do to your bear flag formation in S&Ps?
It overthrew it in both cases, but that still doesn't change my bias. I'm still expecting one leg lower. We're approaching the 61.8.
Yeah.
So I still believe that we can see one more leg lower towards 31.80. That's where I would be looking to offload and see what the market does from there and decide if that's it or there is more to come. Anyhow, one step at a time. For the time being, I'm sorry, I'm looking lower for one more. Thank you. I'm looking lower for one more move. And the same thing with Nasdaq. I mean, no matter which index we see, it's exactly the same type of formation. Dow Jones had a much more tepid rebound, as you see. Actually, the Dow hasn't filled the gap, not even close to filling the gap so far. And the Russell remains the weakest, right? I mean, the Russell is the only one that still hasn't produced a higher high since the summer 2018 high that it gave us. So
that's a canary.
As I've said many times, I mean, that says a lot. First of all, it's a good counter argument to whoever believes that everything is rose in the US and whatever threat to the economy, you should look abroad to find it. Because if that was the case, the IWM, which has only local companies, should overperform by a lot the Nasdaq and the S&P, and not the opposite. So I think that says a lot. And as you said, yes, it is the canary in the mine. Let's see if the Russell can prove to be another VIX, meaning, we've had this prolonged divergence in the VIX, which is still playing out quite nicely. Let's see if the Russell can keep also diverging, meaning not following to new highs until the day we actually get the top of the market and the big move lower that should ensue following that. Now, in other developments, the Aussie and the Kiwi, especially the Aussie, remain very, very weak. I mean, look at the Aussie here on the 4-hour chart. This looks like another little bear flag that is breaking lower. On the daily chart, as we said yesterday, we've clearly triggered the head and shoulders formation, and we're attacking most likely sooner rather than later this zone that developed the previous lows. So roughly at 66.70, 66.80 cents. So no question about it. The Aussie looks and is bearish. The Kiwi is now breaking through the ascending channel and currently testing the 200 daily moving average. So, moment of truth for the Kiwi as well, because if it doesn't hold exactly here, that is definitely a bearish development for the Kiwi as well, which would be pointing to further losses. So today's close is going to be important for this market as well. Same deal here with the Aussie and the Kiwi yen. I mean, they've both broken since the end of last week, the equivalent rebounding channels. And I do think that, especially if we get another leg in risk off, those could end up accelerating much more, because Blake mentioned it once again. The USD yen is simply not playing ball with anything bullish stocks have lately produced. So imagine if we actually turn lower from here once again, there's going to be a big threat that the USD yen is actually going to break through this ascending trend line support, which will immediately open more downside, in my opinion, if we break through this, which now confluences with the 200 daily moving average. So let's say 108.40, 108.50. I think that the next downside support comes at 106.50. So, there can be another 200 pips of downside if that's the case. Now, if you believe that we can go straight on to new highs from here, and the market is going to completely dismiss any negativity that we've seen during the past few days, then this is a nice place. You might want to consider buying the USD yen. Personally, I'm not looking to do so, but I'm just saying. Now, one pair I wanted to mention, because I didn't mention it at all yesterday, and I don't even remember if I mentioned it on Friday, is the USD CAD. The USD CAD still remains quite nicely bid. It has developed this formation, which looks quite a lot like the formation we've had in the DXY. Let me go to the DXY and you'll see just the last part of it, right? This one. So this type of a triangle, and the DXY has clearly broken above 97.70, and as we said, this was a signal that we should be bullish in, at least in the short term, and as long as we remain above 97.70. Of course, I'm conservative with my approach in the dollar, because as I have been saying, neither the moves to the upside or to the downside have been impulsive. So whichever direction we take, I'm not looking to ride it for too much. So in this case, I'm skeptical about how much upside we can get, but one way or another, we can see a slow drift even up to 100, right? I mean, that ascending trend line resistance previously from this channel. So having said that, and going back to the USD CAD can actually end up breaking this formation to the upside, and if that's the case, that's definitely going to be a very bullish development for the USD CAD and can produce a lot more upside. Of course, noting that this formation has been in place since the end of 2018, the first instinct here would be to sell resistance, because nobody says that we can't remain trapped in this formation for longer. I mean, we've been here for, I don't know, like 14, 15 months. There's absolutely no reason why we can't remain trapped here for another 1, 2, 3 months. So, we're in the middle of this range at the moment. We're testing the 61.8, which has proven enough to stall price action for, this is the third actually day. But as I said, I would focus more. There's not much to do here. I would focus more on what's going to happen with the USD CAD if we approach 133. So I think that's where the eyes should be set on this pair. Let me go through some. What about crude? Yeah, crude, as Dale said earlier, and I mentioned yesterday, I think that crude's rebounds should be considered corrective in nature. Let me pull it up here on the 4-hour chart. So here is crude on the 4-hour chart. I would be looking for 55 as as now, if we actually manage to go through 55, I think we can see a rebound all the way to 57.40, 57.50. But in any case, I think that selling rallies is the way to go. I mean, we've had, in essence, no matter how you look at it, we've had more or less a confirmed low. Just look at the RSI here on the 4-hour chart. It actually hit 17. If you have a look at the daily chart, let me pull it up. So here's the daily chart. The daily RSI went all the way to 20. So, any way you look at this, I think that was a confirmed low, and, selling rallies is most likely going to be rewarded for at least one more leg lower towards 51. So, I think that, attempting to be short near 55 for a move all the way down to 50.5, 51 is quite a good proposition, at least from a risk reward perspective and considering the last move. So that's what I think about crude. And of course, as long as that's the case, as long as crude will remain under pressure, it makes sense that USD CAD will have an easier time appreciating further. And the same thing applies to USD NOK, obviously, right? I mean, USD NOK, which has gone vertical after slightly breaking lower, falsely breaking lower from this long-term ascending channel. USD NOK is going to probably remain decently bid as long as that's the case. USD NOK, by the way, testing quite an important resistance area here. Now, I wouldn't rule out a pullback, from current levels, especially given the nature of this rebound. I mean, it was quite brutal. I mean, we went from a very oversold levels. I mean, RSI was actually at 20. We went all the way up to 72, 73. So, quite a nice reaction from, an area of importance. So, there is really no reason to be bearish, since the rebound proved to be, more than something corrective, and since we held the long-term formation. I mean, I was short this. I booked half of my profits, and the other half was stopped out with less of a profit. But I don't regret it. I mean, I was hoping for a big breakdown here, because then we would see a lot more downside, but it just didn't happen. So it is what it is. And the fact is that we remain in an uptrend. Even the specific formation, if you want to focus on it, dates back to the very beginning of 2018, right? So it's already a 2-year move from 760 to above 9, right? I mean, the highs were actually at 930, and we're not far away from that yet. Now, it's not a secret that my macro thesis and long term, I'm expecting the USD NOK to sooner rather than later turn lower and move substantially lower from where it is. But I can't force the market to do something just because I want to. And the chart clearly remains bullish, for the time being, and it is what it is. Now, having to do with the cable, there's nothing to say, and there's going to be nothing to say until tomorrow. We've already analyzed whatever needs to be analyzed here. The cable is coiling within a triangle. Tomorrow, I'm pretty confident that we're going to get a breakout one direction or the other. And predicting in advance which direction that's going to be is extremely hard, but I can give you the two technical scenarios, in my opinion. scenario number one, we don't get a cut. I believe that most likely we're going to get the market ripping through the triangle and, at least retesting the 135.15 high. Now, if the market actually breaks down tomorrow, because let's say we cut and we get some dovish language, in that case, I'm going to be looking for a move towards 127.50 and then a move higher. Bottom line, I remain bullish the pound in the medium term, even if tomorrow's BOE decision provokes another sell-off. I don't consider that unlikely, but I think that will produce probably another buying opportunity. So my medium term thesis will remain the same, even if tomorrow we see a sell-off. So I know I want to be buying the pound, but it will show tomorrow if that can happen from lower levels or a breakout. Aussie Kiwi view and USD CAD. Let's have a look. USD CAD is very bullish. We'll go 133 for sure. Yeah, I mean, it has quite an easy path to 133. Now, what's going to happen from there, 132.90, 133, is going to be very, very important for the trend. Very important for the trend, because if it gets rejected from 133, in essence remains, in a coiling formation. Now, if it breaks through 133, I think it's going to be very tough not to see follow through to the upside. So I wouldn't be fighting strength above 133. I think it's going to be the wrong proposition to try to fight strength above 133. Can you address the question I asked Blake with USD MXN carry? Yeah, sure. Let me find it, please. Again, yields are lower, which gives JPY strength, credibility from a fundamental perspective. Blake has BOA rate cut probabilities now below 50%, even if the does not cut cable will not rally. Blake USD MXN carry. Why today? I think he said because we have expirations today. I think that's what he mentioned. So that's what he said. Aussie Kiwi and NZD CAD. So let's have a look at both of those. So Aussie Kiwi definitely remains under pressure. Let me pull the chart. There it is. So the Aussie Kiwi remains under pressure, but is still barely, but it is holding this ascending channel. So, from a risk reward perspective, attempting to be long here makes sense, right? I mean, we're holding this formation. Now, it also remains very heavy. So in any case, if it breaks through that, I would expect a move towards parity and probably quite an expedited move towards parity. So, we are in the brink of breaking down here, but we haven't done so yet. So take it as you wish. You like it the short side, breaking down should confirm and should produce more downside. You like it to the upside, this is where you buy it. You have a very, very tight risk, and any rebound will be multiple times what you will be risking at the moment. So depends on what kind of trade you want to have here. Now, having to do with the other question that was related to the Kiwi CAD, this is what I'm tracking in the Kiwi CAD, a possible head and shoulders formation. So it is currently poking its head below the neckline. Now, would I be selling it intraday, especially knowing that it's a pair that doesn't easily produce big moves? No. Let's see how it closes today and we take it from there. But nobody can doubt that this looks like a decent head and shoulders formation. So if this proves to be the case by closing below today, I think that you should expect this head and shoulders target at 84 cents to be hit in the weeks ahead. And at the same time, and not coincidentally, this is the Aussie CAD, which is also testing support of what looks like a corrective formation to me. So admittedly, both of them look much better for a continuation lower than anything else. One of them for breaking to new lows imminently, and the other one for triggering that head and shoulders formation. Of course, the Kiwi CAD is, has some distance from the previous lows. I mean, the Aussie does look heavier, but both of them are in the brink of, breaking down. So I think that's, if you want to trade them, that's the direction you want to trade them. My pleasure. Pound, why bullish? You mean why I'm medium-term bullish? Because I'm not saying I'm bullish ahead of the BOE. I'm no magician. I mean, I can't, I can't predict if they're going to cut or not. Why I'm medium-term bullish? Because I think that despite the recent two reasons I'm bullish. First of all, because I believe that despite the recent big recovery, the pound is still pricing in a lot more negativity than it might end up having to price in. So from a fundamental perspective, I think that the UK is going to be doing better still than the market expects. And the second reason is because my longer term thesis about the dollar is going to is that it's going to break down. So, whenever I'm looking for longer term, I don't want to be long the dollar for longer term positions. I mean, if I had to do something with the dollar at the moment, I would be buying it, right? Because in the short term, there is no doubt we had a bullish breakout from 97.70, and nobody can refute that. But if you're asking me for longer term horizons, I don't want to be long the dollar in any way or form. Okay, so whenever I go long the dollar, I do it for shorter term trades, and I feel much more comfortable when I'm holding short dollar positions. Now, that's because I have a longer term bias. That doesn't mean it's going to play out immediately, but for psychological reasons, since my longer term bias is that the dollar is going to move lower, I feel much better holding short dollar positions. It's as simple as that. Let me go back. Dale, again, yields are low. Yeah, we mentioned that, which gives JPY strength. That is very true. Okay, so CAD yen and Kiwi yen, and my thoughts on Palladium. So Palladium, speaking of Palladium actually did produce, a decent rebound earlier, and it has already retraced all of it. So it bounced like $50 higher, and nobody cared about it. I mean, they just sold it again. So that makes me feel quite nice still holding. I mean, I'm currently $150 in the money here. My cost average is at 24.25. And I'm still looking for a move towards 2000. So I think that, Palladium is looking, quite nice for more downside. So nothing has changed having to do with my thesis here. Now, the question about CAD yen and Kiwi yen, I actually did show Kiwi yen briefly. I'm going to show it again, but let's go first to the Canadian against the yen. And Canadian against the yen might be quite a nice opportunity, especially if we see some risk off, right? Because risk off tends to assist the USD CAD. As we said, USD CAD can easily move towards 133, which is quite a significant resistance. At the same time, risk off always gets provides a nice bid for the yen. And I like the fact that we rebounded and likely getting rejected from this broken ascending channel. So I think that CAD yen is not a bad proposition, for a short position. Probably one of the good-looking ones out there. Now, Kiwi yen is not much different, meaning Kiwi yen did break down. Let me pull it up. Here it is. Kiwi yen did emphatically break down, and not only that, it actually gapped lower to start the week, and it hasn't even filled the gap. So Kiwi yen looks quite decent as well. Now, we have the 200 daily moving average, which we haven't tagged yet, but if we slice through that as well, I see no real support all the way down to 69 following that. So, Kiwi CAD looks decent to the downside as well. So both of them, I like them a lot more to the downside than anything else. To answer Jason's question, missile attack in Aramco, really? Let's have a look at crude. I don't see anything really from crude. I mean, it's unchanged on the day. So yeah, so I don't see anything that the market actually, cared about. Coach, do we have an interview today?
Yes, my favorite bull.
Oh,
Kip.
Kip.
Kip is with us. He's in the house too.
Okay, if he's in the house, I think I've gone through all the questions.
Okay.
On a positive note, I'm on board with Kip having to do with his bias on metals and miners. Yeah, absolutely. I mean, if I wanted to be long something in the indices, that would definitely be the miners. No question about it.
I'm sure that gives them comfort. We'll probably be pairing them today. All right. So thank you, Steve. All right. Kip, welcome back to Face, buddy. Let me just get you set up here. If I was trading stocks only, I would be with Kip. How are you, Kip?
I'm great. How are you, my friend?
Good, buddy. So welcome back to Face.
Hey, great to be with you again. Thank you very much for the invite, as always.
Yeah, great to have you. You're not going to be sharing your screen, right? You just want to talk to us. So
that works for you. I'm a simple man, Dale. I'm a simple man.
Yes, people said, Dale, you're a simpleton. So let me just pull up perhaps some stock indexes, and I want to ask you, Skip, I remember one of our interviews that there was that big sell-off in December last year. Okay, not this December, the year before, where, we had that worst month since 29. I'm just curious if, I know I read your stuff, Skip. I get your promo emails. It's very good stuff. And you talk about short-term things. Do you think there's any vulnerability in the market here right now with, what's happening with your work technically? I'm not going to ask about, fundamental events, if they're going to shake things up, or perhaps what you're expecting from the Fed. I know you have still much higher long-term objectives. I'm curious if you might be thinking about taking a little off the table here, or you're hoping there's a correction of 5 to 10% to just add on to your book.
Hoping for more of a correction here. Not sure we're going to get it because of just the strength of this earnings season. It's just, and really the Trump economic miracle. I mean, this is really just the beginning of the move higher. So,
Okay.
we put out some work about a week ago about the strength of the technicals, and how they were too strong. And we saw the strongest technicals, in other words, as a contrarian indicator, too strong since Trump was elected, number one. And number two, this is something we really didn't see anybody else talk about that we thought was kind of a big deal. The percent of S&P 500 stocks above the 200-day reached the highest level it's been in 5 years, one of the 4 highest levels in the last 25 years. And that happened last week. And 84% above the 200-day. And so that really told us that we were probably going to have something like, it wouldn't matter if it was the coronavirus or Dolly Parton, got the flu. Something would have brought the markets down because it was just so overbought. And we were hoping for more of a pullback to add to positions, but Dale, it doesn't look like we're going to get it. And by the way, the last time we were this overbought was 2013, and we had a shakeout. And then we had the next year, the market was up 27%, S&P 500 up 27%, and it remained at extreme overbought levels for almost an entire year. It was kind of a crazy period. This feels like that to us.
Okay, not like this. You see where my cursor is? Because
I
we were pretty extreme right here going into 2018 and had a couple of down weeks here. So you're saying the measurements that you're getting now are way surpassing the sentiment levels, and all the readings like new highs, new lows, AD, all of that is better now than here.
Yes.
Okay. All right. So you also were on board for this run in the metals and in the miners, and they've outperformed the metal. You and I were even talking on Twitter, and I said, well, I think we could see 1600 by March. Happened, called this a bull flag, and we've achieved it. I've looked at some COT data, and it's not a great setup in COT the way it is right now. I can't get bearish gold until I see yields bottom, and I don't think we're there yet. So still all green lights for your miner trade. And do you ever take partial profits, Kip, on runners, and take something off the table and let it run?
We do we have an options program as well called Parabolic, and that's really for those that have an interest in more short term. Our holding period there is about 2 weeks. Other
Okay.
than that, we're long-term investors, and we like to use dollar cost averaging on a monthly basis to add to our favorite positions. But as far as the miners go, I mean, what a great setup. Here you have back-to-back events in the Iranian missile crisis, or whatever you want to call it, and then we have this corona with Lyme virus that broke out, and gold ramps and the miners do nothing but sell off every day right at the open. Just terrible action. But again, and I think I speak for you too, we're not long the miners because of some missile attack that could lead to World War III, or because of the flu, which already kills about 800,000 people a year. We don't own gold in the miners for that. We believe this is a long-term structural bull market in this group, and that 1600 is in the very near future, and that the miners on this next move, and we think we're in that move now, GDX breaks 31 on its way much higher. Remember, the last 2 times that gold has been 1550 plus, GDX was either 53 or 30, I think 36. I think those are the 2 prices. So today we're at what, 20?
We're trading 28.31, and during the decline in gold from 1900 to 1050, and then even once gold bottomed, the miners are still eroding. And doesn't that have to do with the more leverage they are, the more debt they have, and they were punished more when gold was doing nothing because of debt service, and you really have to do your due diligence before you go out and buy any individual miner?
Absolutely, and there's a great book for those who really want to get into the subject about what's happened to the management teams of these mining companies, called Groundbreaking by Ann Bridges. She may even be on the call this morning, and I'm just about halfway through it right now. But she makes an amazing case for why, when this group goes, the move is going to be incredibly explosive, because these management teams have been so beaten down, with environmental regulations and the inability to really operate in the U.S. She's talking about primarily with any kind of a savvy business technique, because the government just keeps you under their thumb, and so this lack of production from this it means the move will be that much more explosive. But I'll tell you what, it's one thing about the miners. If you've been in this group for any time at all, you got to be patient. When the move happens, it happens real fast.
Well, isn't part of the reason is if you put the market cap together of GDX, maybe it's not even 1/10 of, or 1/100th of Apple.
Yeah, there's one in the S&P 500. There's one mining company that's in the S&P 500. That's Newmont.
Yeah.
I mean, if you're looking for the single contrarian signal to own this group, that's probably it.
Okay, so looking at gold, oil has really been disappointing. Last year when the S&Ps were bottoming after that bad December, crude bottomed in January as well, but really the the liftoff in crude compared to stock indexes was pretty feeble, and it's under pressure here. Are you looking at any opportunity in the oil patch? Because there's another group whose market cap has shrunk dramatically as far as a share of S&P.
Yeah, we're long in this group as well, and frankly, jump back in a little too soon. But if you look at where we are right now, we're at as of yesterday anyway, the most oversold levels that we've been at in a year. Matter of fact, the setup between now, so I think it was I want to say May, June. I don't have that in front of me, but the setup is almost identical to the extreme oversold levels we hit across all the oscillators and technicals that we follow, almost identical. And the move that followed that was almost, it was a 3-week or a 4-week move higher by about 22%. And
okay, so you might be talking about here in WTI, is there an ETF or an individual issue that you're measuring this with? Or
yes.
Are you doing it with the WTI?
Just using WTI, and
okay.
And the two ways we're playing it right now are with the 3-time leveraged ETF for the for energy stocks, which is ERX. We're long that, and we also like as an individual issue, we like Petrobras.
Okay, so going down to Brazil.
That's right.
All right, so here,
Past blue ribbon for the old timers.
Yeah. All right. So what's the symbol again for Petrobras? I want to take a look at it.
PBR, Pabst Blue Ribbon.
You know, you bring it up. My father worked for Pabst Blue Ribbon for 20 years.
Is that right?
Yeah, and then he got a promotion and started distributing Heineken. So
Ooh.
I don't know if you've ever had a Pabst or a Hams or any of those Midwest beer Lats. They taste like metal. Or I can't even drink one of them now. Anyway, all right, so here's ERX, and here's Petrobras. Okay. Any type of dollar play, or, you know, just a move away from U.S. assets? So you have a view on the dollar for perhaps international exposure, Kip?
That's not really our lane. I'll leave that to the experts like you, Dale. But, you know, I wake up every morning praying that the dollar declines. I think I'm on the same side of the team that Trump's on here. It's just, you know, the dollar's been way too high for a long time. What's your view right now?
What's that?
What's your view right now?
You know, strongly neutral. All right. So I can't get short the euro down here, and I can't buy it. Basically, you know, I'm just looking at trading opportunities. Perhaps there's one more blow off high coming here, but as you can tell, my conviction level is low, or you would have had an answer 10 sentences ago. So you know what? It's something that a lot of people have a hard time saying. I used to, but this is what I think. I don't know.
I like an honest man.
Okay, so I don't know. If I have an opinion, I'm in it. And if I don't, there are plenty of other amusement rides for me to take. So I'm pulling up your website here, Kip, and, you know, I want people to see this, and, you know, the research you do. And if people want to subscribe, you just go right to Kip Herriage. Is it .squarespace.com is your website?
Just kipherriage.com is fine. And,
okay.
You know, it's funny that's our blog page you're pulling up there. And it reminds me, it was just a week ago that both Barron's and Forbes put out pieces saying, okay, Dow Jones 30,000 is a certainty and the melt up is just underway. I mean, these guys, could they beat?
Doesn't that make you nervous? Because, you know, they're saying it now.
Absolutely. Well, they said it a week ago. That's when I got nervous. I mean, we knew it was about to happen because they're the worst market timers in the world.
Right. Okay. All right. So this VRA, what does it stand for again, Kip?
Vertical Research Advisory.
Okay. And you had a mentor that taught you this.
I did. Yeah. I had two great mentors. Man, it's a pretty cool story. Ted Parsons and Michael Metz with Oppenheimer.
Michael Metz, yes. God, I used to turn the volume up when he was on CNBC.
Was just a great guy. He was director of research at Oppenheimer and kind of took me under his wing when I was there. And the cool thing about both of my mentors is that their mentors worked on Wall Street during the Great Depression, during the crash and the Great Depression. And so that's kind of the lineage that I come from. And I think about those guys literally every day and the lessons they taught me. They were real big on sentiment. And they said, look, it was in the old days when I got started in 85, we didn't have computers. Everybody the traders came into our office every day and just sat and talked to brokers, sat and watched the screen, the scrolling screen of stock prices, and then would put their orders in through the broker in a tube system, okay? So they would come in and sit there and they said, listen, here's how you time the market. It's real simple, Kip. We want to be when nobody's sitting in here, we want to buy calls on everything, and we buy all your top blue chip stocks. But when this room gets full, sell everything. It's not more complicated than that. And that just stuck with me. So we use the sentiment indexes now in much the same way. And of course, as you know, everybody's getting bulled up again, and that's usually a sign of short-term caution.
Okay, and your targets are still 40K Dow sometime in the next couple of years, right?
50K plus.
50K plus.
Yeah, by the end of Trump's second term. Now, obviously, if Bernie gets elected, it looks like he'll be the nominee.
What do you think the chances are of that, Kip?
I think not very good, but I think the media won't present it that way. It'll be like this virus. The media will make it appear like, look at this the polls, they'll say. The polls show that Bernie's going to win, so there'll be a lot of nervousness in this market, probably in the second half of the year. But I think for the smart money, that'll be a buying opportunity. But we can see a lot of volatility and downside in the second half of this year before Trump wins re-election.
Part of your work, it almost sounds like you have a handle on certain cycles too, or is it just, having been you've seen this rodeo before? What is it?
Yeah, it's just 35 years of doing this.
Okay, so the uncertainty, we have Iowa next week, and we're off to the races, and your belief of, looks like a layup that this impeachment is going to end with acquittal. Do you think that we're going to get to hear from John Thunderbolton?
Boy, wouldn't we love to hear from all those guys, just because it makes for great TV. But the one we want to hear from, of course, if you like Trump, or if you're Republican, conservative at all, if you're not a fan of the deep state, as Trump likes to say, would be the Biden family. But the odds of that are slim to none. Look, all of these Washington D.C. swamp creatures, they all do the business the same way. It's the deep state LLC. This is how they operate. They have their kids positioned all over the world, making money, building the family brand, building the family business. So we're not going to see any of that craziness. The Senate would not open that door, in our opinion. So this will probably end with a whimper rather than a bang.
Okay. So I know this might be a little bit controversial. We have a policy we really, even though I don't follow it, talk about politics. And I'm going to ask you this because I want to understand something, not because I'm trying to convert or proselytize or anything. But I'm curious if you could help me understand, the economy has done well under President Trump, and we have all kinds of great numbers, and stock market projections are great. But I think I know a little bit about your spirituality, Kip, and I'm wondering how you square that with things like take her out, she's going to go through some stuff, he hasn't paid the price, and to me, President Trump is much more Old Testament, an eye for an eye, than turning the other cheek. So how do you square that with your spirituality? Help me understand.
Yeah, it's a great question. I think it's something we all have to deal with. But, like Ted Parsons, my first mentor, always say we're spiritual beings having a human experience. And, I lived and worked in New York for a long time. And I knew a lot of people like Trump, and it's just a very different breed. Unless you've worked in New York and know some of those older generation guys, older than me, even generation before me, then it's hard to understand a guy like that. But I know those people, and so I pay it very little notice, because I think at his core, I think he's a really good human being that loves America to his core, to his very DNA. He wants to see this country do well. So that's why I pay attention to. But I'll take it even a level a little deeper. I think for this country, and really for the world, we've had a 15-year nightmare, Dale, from 2001 to 2016. 9/11, recession, Iraq, Afghanistan wars based on bullshit WMDs that didn't exist.
Yeah,
George Bush, worst president of my lifetime. We can go on, the housing financial crisis, the crash. It really was a 2-year depression. Then we had Obama for 8 years and Obamacare, which really destroyed my family's health insurance. My wife has had a long-term illness, and I cannot tell you the damage it's done to my family and the people that I know. Then we had the opioid crisis, of course, which is still killing 70,000 people a year.
Well, you know what? Obamacare saved my life, Kip.
Well,
because I had pre-existing conditions, and it wasn't until I was able to get Obamacare that I found out I had colorectal cancer. And so,
Wow.
So there are two sides to that story.
Absolutely.
Okay.
And I'm so assuming that you're fully recovered.
It's been 5 years, and I'm talking to you.
Oh man, well, hallelujah on that one, brother. I didn't know that before now, so that's great news. And I couldn't agree with you more. Obama finally took on the issue of healthcare for the average American. And I couldn't agree with you more. And that, by the way, I did just say that George Bush is the worst president of my lifetime. So
that shows that it's not a Republican or Democratic thing. You're just looking at the president and what they have done or where they're going.
I'm a lifetime independent, so I voted
he's a libertarian.
Yeah, right. And I was, by the way, I was on the national board of the congressional committee for the Libertarian National Committee for 2.5 years, and they just got crazy. I mean, it attracted a brand of crazy I had not seen before, so I had to leave that post. But libertarian, independent, that's been me. I think we're probably speaking the same language there. But anyway, I think my bottom line point is I think we've had 15-year nightmare. We're now due for 2 decades plus of prosperity and peace. And I'm very hopeful that's where we are now.
Well, let's wrap it on that because you and I agree on that. I'll go to Edwin Starr. War, good God, what is it good for? Absolutely nothing. So Remember that? You were young when that song was out, right?
You got a good voice, man. Get your band back.
Yeah, well, I do it. I'm delusional. I think I'm Elvis Presley. That only Elvis trades now. So I'm showing your vertical research advisory here, Kip, and people that want to be aggressive because Kip he's aggressive. He's not your average Payne Weber, Merrill Lynch guy that's going to say, oh, if you're in 30% bonds and cash and this and, this is Kip and his direction for the market. So I hope it's a great 2020 for you, Kip. And you know what? Thank you for fielding that question. I was torn whether or not to ask you, but I guess people from New York and Chicago are different.
Well, I've known that our political views were different for a while now, and that's why I respect you. One of the reasons I respect you so much is because we should be able to have these conversations. What happened to the days where we could talk about these things openly and freely and learn from each other? It's the divisiveness of this country. That's the one thing that the media seized on about Trump. They blame it on Trump, but man, this media has had it out for him since before he won, and you got to see both sides of that coin,
Well, even families are being divided. So a key question is if, you have a good friend or a family member, instead of trying to win an argument.
Yeah.
Here's a great question. Help me to understand why. And that's what I asked Kip, and now I understand. And, even liberals like Bill Maher said, you may not like the president, but you can't not like the people that like him. So thank you very much, Kip, for being here. Great trading, man, and have a great 2020, and let's get back in touch maybe around the spring. And I can't wait for the interview when I hear you talking about there might be a correction. Anyway, up and away with Kip Herridge, and you can follow him at kherridge on Twitter. Thanks, Kip.
Thank you, Dale.
Appreciate it, buddy.
Really appreciate it, man. Have a good day.
You too. All right, everyone, that's a wrap for us. We'll see you tomorrow. And tomorrow, we'll be probably focusing on the energy complex because I have Kirk Spano with us tomorrow. So thank you, everyone, for hanging out. Good hunting. Remember, don't just count your pips, count your blessings, and we'll see you tomorrow. Thanks again, Kip Herridge.